Good day, fellow investors. It has been not even 2 months since I launched my stock market platform, and I wanted to give you an update on what I do, how I do it, why I do it, and how my research approach is done over, let's say, a month or two that I have been doing this full time. Let me show you. So over the last 6 weeks, 7 weeks, I have researched 3 sectors in depth. The first one was the Chinese fintech consumer lending sector, where I analyzed all the stocks there, about 8 or 9, and we had one that is a relative buy, let's say. Then I researched the solar industry, which is a positive long-term trend, and then again we find one stock to buy. We researched 40-50 stocks and just one is to buy because I'm very conservative and I'm really looking to find the best long-term investments there. However, a lot of reports, a lot of things to read. And lately I have been investigating Brazil, later I'll go to Argentina, then China, which is getting again cheap, 5G, gold miners, it's again cheap. So a lot of work, but I love it. So Brazil, again, I have found one stock to buy and one stock to watch over time. And then I have the portfolio there, which I update and I rebalance accordingly when necessary. There's not a lot going on, we don't want to pay a lot of fees, but long term, we want to make a great portfolio. More about that in a video next week. Additionally, over the 6 weeks, I have made a report about a gold miner I have been following for a few years now, another Chinese online platform growth stock analysis also that I've been following in the past. There's my take on Amira, what's going on there, what's the risk reward, and then another merger arbitrage play which offers 15% returns in a year, hopefully. Or even longer term, if it doesn't go through, we'll average down easily. So that's what I do. With time, the goal is that we cover stocks. What does it mean to cover stocks? So that we adjust our models, our values with earnings, with news. Should we buy more of the stock? Should we buy less, depending on the price? All those stocks are very volatile. And when you do something like that, the best thing is to have a comparable table with earnings model that tell you what's the intrinsic value. And then the intrinsic value compared to other 30-50 stocks, which is the goal of the platform, then gives you, okay, what is cheap, when it's safe, in order to lower your risk and increase your long-term rewards. So that's also why I started the platform. On YouTube I can make a video, but I can't continue to come back to those videos with every news. Therefore, I started the platform, everything systematically done, really showing, okay, what's the story behind the stock, what are the news, what do we do, should we buy more, should we sell in the portfolio? And that's the only way I can really show what I'm doing. YouTube videos are good ideas generating, investment education. I hope it will improve the more I do the work, the more I increase my knowledge, the more knowledge will come on YouTube. However, you must understand that it's difficult to show investment thesis in videos. A report there has from 10 to 20 pages of analytical work. So that's difficult to do in the videos, and next week it might already change. So that's why I really wanted to put all my research there in detail and what I do. Nevertheless, with such an approach, in a bit of time, we'll be covering 30 to 50 stocks. We will have researched, I don't know, 20, 30, 40, 50 sectors, and we'll know, okay, this sector is getting cheap. What are the prices there? What are the best options to invest there? What's the value there? When that hits good returns with low risk, then you buy. And over a year, I'm sure we'll find 5, 10 investments, perhaps 15, depending how what's the risk reward we like. I'm going to increase my expected return to lower my risk, but that's something also more I'll talk in the portfolio video next week. So the thing is, the more you have, the more knowledge you have, the more research you have, the more options you have. Okay, that's too risky, that's not too risky. Then you wait for better and better investments. You just need a few of those every year and you have a great return with low risk. And that's not that difficult to find. Let's see the volatility in a normal stock. So Apple has doubled over the last 2 years. So a stock like Apple has really increased from 90 to 190, but the 3-year change is just 50% because it went from 140 watt to below to 90. So very volatile for such a big stock. If you move away from the biggest stocks, there is even more volatility to be taken advantage of. The Shanghai Composite Index was below 2000, then spiked to 4500, 5000, and now it's again closer to 2000. So it's in a bear market. So if you can take advantage of those volatilities over the long term, that's additional returns for you with lower risk, but you need to have the earnings model and the value models ready when that happens. So I must say, I'm now full-time doing this for about 6 weeks. I'm loving it. I'm very excited to see where will I be with my investing knowledge in 3, 5, 10, 30 years. So I'll keep doing what I do with enthusiasm, with hardworking ethics, because I see myself doing this over the next 10, 15, 20, 50, 60, 70, perhaps I'll retire at 100 years, because I love it. I love to help people, and even if I help just a little bit with the YouTube videos, then my mission is done. Thank you for watching. Looking forward to your comments, any additions, any suggestions, any nice complimentary comments, always welcome, and I'll see you in the next video.